This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices are set to remain under pressure in 2025 as U.S. tariffs and slowing economic growth in India and China weigh on demand, while OPEC Plus pushes forward with plans to increase output, a Reuters poll showed. A survey of 49 economists and analysts in March forecasts Brent crude will average $72.94 per barrel in 2025, down from February's estimate of $74.63. U.S. crude is expected to average $69.16 per barrel, slightly lower than last month's $70.66 outlook. With global crude balances expected to widen by 300,000 barrels per day, BPD, this year, the market is teetering on the edge of surplus, said Florian Grunberger, senior analyst at Kepler.
U.S. President Donald Trump's threat to hit buyers of Russian oil with tariffs had a limited impact on oil markets on Monday, as traders tried to determine how far the White House could go after Chinese and Indian oil importers. Trump's proposal to hit buyers with a 25% to 50% tariff would be significant for oil markets if it turned into an order, but analysts and traders questioned whether the threat was just Trump showing one of many cards in his talks with Russia. He changes his mind, so the market is struggling to keep up, said Adi Imsirovich, an energy consultant and former oil trader. The market does not believe it anymore until it is firm and a few weeks old.
Moving on to the top news in the energy sector.
The White House is considering an executive order to expedite permitting for deep-sea mining in international waters, allowing companies to bypass a UN-backed review process. This would mark President Trump's latest attempt to tap into critical minerals like nickel and copper, following recent efforts in Greenland and Ukraine. The International Seabed Authority, created by the UN Convention on the Law of the Sea, has been considering standards for deep-sea mining in international waters for years.
Indian refiners have rushed back to the market to seek crude supply after President Donald Trump's threat of more penalties against Russia raised concerns over potential disruptions to oil flows. State-owned Bharat Petroleum Corp. and Hindustan Petroleum Corp. are seeking additional supplies for May arrival from regions such as the Middle East, North Sea and Mediterranean, said people familiar with the matter. The trading cycle for barrels delivered next month is typically concluded in early March. On Sunday, Trump raised the prospect of so-called secondary tariffs on buyers of Russian oil if President Vladimir Putin refused a ceasefire with Ukraine. The comments drove benchmark futures higher, with West Texas Intermediate surging 3.1% on Monday, the biggest gain in almost 11 weeks. Next, we have the top news in metal markets. The premium for aluminium shipments to Japanese buyers for April to June was set at $182 a metric ton, down 20% from the current quarter, as demand remained dull at home, 6 sources directly involved in pricing talks said. The figure is lower than the $228 per ton paid in January to March and marks a first quarterly decline in 5 quarters, but it remains below initial offers of $245 to $260 per ton made by global producers. Japan is a major Asian importer of the light metal and the premiums for primary metal shipments it agrees to pay each quarter over the benchmark London Metal Exchange cash price set the benchmark for the region.
Gold prices hit a record peak on Tuesday, as concerns that U.S. President Donald Trump's reciprocal tariffs might fuel inflationary pressures and impede economic growth drove safe haven demand. Spot gold was up 0.6% at $3,143.05 an ounce, as of 0550 GMT, after hitting an all-time high of $3,148.88 earlier in the session. U.S. gold futures rose 0.6% to $3,169.50. In the previous session, bullion recorded its strongest quarter since 1986, marking one of the most significant upswings in the precious metals history.
We will now look at the top news in the agricultural sector.
The U.S. soybean crush likely dropped in February to 5.662 million short tons, or 188.7 million bushels, according to analysts surveyed by Reuters ahead of a monthly U.S. Department of Agriculture report due on Tuesday. If the average of 8 analyst estimates is realized, it would be down 11.2% from the 212.5 million bushels crushed in January and down 2.4% from the 193.4 million bushels crushed in February last year, which was a day longer due to the leap year. Crushing rates have generally increased in recent years as several new plants have come online while other crushers have expanded capacity to meet rising demand for soy oil from biofuel makers.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.